All right, everyone, here we are with ticker symbol IDEX, Ideanomics Inc. And before we jump into this chart, I want to say welcome to all the first-time viewers and investors. Welcome to the channel, Invest for Tomorrow. To all the subscribers, welcome back, and let's jump into this chart. So here we are with Ideanomics Inc. And Ideanomics Inc. has been in a downward trend. We've been watching it, some sort of type of, right? Nah, not really some sort of type of. Actually, some consolidation has been formed here. It wasn't some sort of type of. It was actually a consolidation that started to form. It was slowly moving downwards in a downward trend. It reached lows here of about 166, 165, and previous to that was 170. We wanted to watch the 170 mark. It slightly got broken through, and as soon as it got broken through, we were watching it in our previous videos with the MACD, with the moving averages, the 50-day, the resistance levels. It actually was indicating that there was a possibility of a reversal. We needed to watch it closely, not because those indicators always state that there's an indication or it's leaning towards a reversal that it's going to happen, right? There's no perfect indicators, but using several different indicators can go ahead and show you the possibility of turnarounds like this, which we saw. Friday was kind of in a downward upward movement, and then here we are with Monday. This is what we got here. So we slightly fell and slightly started to run, and it's exactly what happened Friday. We slightly fell, and then we just broke out from those lows. The MACDs were indicating the possibility. The indicator that we were watching for to break through, it got broken through, and then significantly the 50-day moving average was left behind, and you can see that bullish run. Now, right now, when you zoom out, this is a bullish run here, and the bulls are dominating. I did state that the bulls needed a breakthrough resistance to continue this run. They've certainly done that. We're currently at 210, and let's see our new resistance and support based off the chart, based off of what it's showing us. And I want us to look at this closely because our support has slightly changed, but when you really look at the lowest point reached in the day, it is currently the support that I used in the previous video. So we're going to use this support as a midway point before even using the next support and getting to the 50-day moving average. But I want you guys to see how previously this was such a bullish run that we didn't have a true support level to look at. But based off of the way the chart was showing and indicating to us that this was running up, and there was a slight, right, candlestick here where the bulls lost a little bit of that upward control and the bear slightly appeared leveling off, we had this support here, and we also had a midway point to use as well. But this was the support we used, and currently that is the support that was used to go ahead and bounce back up. So interesting enough, that's how great it is to analyze charts and be aware of the charts. They're not perfect, but charts do tend to indicate and show you what you need to focus on and center on to understand the overall situations going on with the whole company and the whole chart and the stock itself. Because if this was going down and we didn't have any indicator here or any point as a support, you would have thought that this already went down from 204 to about 195 and that this is getting closer to the 50-day moving average without any sense of a turnaround. Now, also, there's the other example that you might have saw this break down to these lows here, which it hit lows of about 192. And if you didn't know about this support and you didn't just act too quickly and you waited to see how quickly it was moving down, and we had the midway point support, which was 188, to kind of see the behavior, how quickly it was moving down, or could the bulls reappear, you would have probably been an investor that made a decision based off of where it was at without having the other indicator, without having also the direction and center direction based off this support. And 30 minutes later, as we can see by removing these lines, it actually used the current support that we were using yesterday at 195 again, and from that point forward, the bulls went ahead and continued that momentum. So it's really interesting to see how charts are, why charts are really good to actually analyze and use to kind of have, like I said, a better understanding of what's going on, and like not let the chart and the movement distract you from the focus. That's probably one of my best advice about charts. Don't let the movement of a chart or the stock price distract you from your focus. You know, you want to know midway points. You want to know where the 50-day moving average is. You know, you want to know all those things, because if you don't know where those things are located, you would have thought that this was a really big downward move and gotten out, cut your losses or cut your profits if you got in early. And then here you are seeing the run continue. And you're like, oh my gosh, I didn't see that coming. What could have I done or watched for to be aware of this stuff? So that's the cool things about chart analysis. So here we are. Let's jump into this and see. 195, very important. That's the support level that was used to continue to bounce up and reach newer highs. And it was the support level from yesterday to today. And it's the lowest point before the run continued. So I want every single investor to be aware of that. Now, the second lowest point, which we're going to use as support here, was up here at this point at 199. It's not a big difference. It's 4-cent difference. But 199 is the point of reference here where you could see that it started to level off and it looked like the bears were trying to reappear, and it continued. So 199 is important. You have that window between 199 and 195, still in bullish territory to see if the bulls reappear or the bears are tearing this one down. And the 50-day moving average is down here at 191. 191 is your 50-day moving average. The closer you're getting to 191, the closer you're getting to bearish territory. And the moment you're below it, you are now in bearish territory, and the bears are starting to gain control, which we could start hitting newer lows, new support levels, and pull further down on the chart. So I want us to be aware of that. So 191 is the point of reference to know where we're at. But before worrying about that, 199 and 195 are the two support levels that you can watch carefully to see how quickly this is moving down, still in bullish territory, or are the bulls trying to reappear. On the other hand, we have our resistance. Our resistance is 211. 211 needs to be broken through to continue this momentum, to continue to work its way up, to reach newer highs. And 211 needs to be turned into a support. I want every single investor to be aware of that. 211 needs to be turned into a support so that the bulls can continue to pull away, reach newer highs, new resistance levels, and get deeper into bullish territory. So I want every single investor to be aware of that. 211 needs to be turned into a support. That's my emphasis right now for the bulls to continue this run. And we're going to want to watch this, how quickly it's moving down or reacting within this support of 199 and our resistance of 211. And I want every single investor to be aware of the fact that the 50-day moving average will start catching up to the price if the bulls can't break through resistance. Even if they touch it and come back down and they can't turn it into a support to continue their run upwards, it's going to be very important to watch this. Why? Because the 50-day moving average will catch up to the price and cross it at some point, ending up above the price, and the price will end up below it in bearish territory, giving leverage to the bears to bring this down to newer lows and new support levels. And all this momentum would be lost for the bears to lose control over the chart. So it's going to be important to keep that in mind and pay close attention to that. Another thing too that I want every single investor to be aware of, 204 has been broken through. Also the 207 mark has been broken through. And the next point of reference, if the bulls can break through resistance, is 220 in the near term, right? In the next coming days or weeks, according to the volatility, if the bulls can break through 211, turn it into a support, and pull away from it upwards to new resistance levels and newer highs. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money.